Welcome back, students. So today we are going to see a new chapter. Chapter 6, Subsidiary Books. So normally we know about the accounting cycle. We will be starting with recording of transactions into the books. Journal. We will make entry in the journal, right? So when we talk about the subsidiary book, subdivisions of journal in which transactions of similar nature are recorded. Subsidiary books are nothing but it is similar to a journal. It is not actually a journal, but it is a subdivision of journal in which transactions of similar nature are recorded. So what is a transaction? Any financial activity which results in the transfer of money or money's worth, you call it as a transaction. So transactions can be divided into cash transaction and credit transactions. So all these cash transactions, when you purchase goods for cash or when you make a sale for cash, sold goods for cash, so cash is involved there. So in case of all cash transactions, it will be recorded in a book called cash book. So all the cash transactions will be recorded in cash book. What about credit transactions? Where will we record those? We will be recording those credit transactions in day books. So you have purchase day book to record all credit purchases of goods. Sales day book in order to record the credit sales of goods. Then purchase return. So we have discussed about purchase return and sales return before. So in case of any damage, goods will be returned back to the supplier. So in case of purchase, we have purchased goods on credit from X and company. And out of that, 5 goods are damaged and we want to return it back to X and Co. It is called as purchase return. This will be recorded in the purchase return book. So in case of credit sales, we have sold goods to Z. And Z is returning back the goods to us, stating that the goods sent to him, which is not according to the order placed. So there may be any reason for the return. Right now, Z is our customer. He is returning back the goods. So it is nothing but sales return. In bills receivable, when are we going to get back the amount from our customer? It is bills receivable book. In bills payable book, when are we going to make the payment to our supplier? So all these books are meant for credit transactions. If any transaction which does not fit into these 6 will be entered or recorded in the last one, journal proper. For example, opening entry. In case of existing business, the business already has set of assets and liabilities, right? So in case of any sale of an existing asset, those things will be recorded in journal proper. Journal proper. So opening entries, closing entries, adjustment entries. So all these things will be recorded in the journal proper. Closing entries, then adjustment entries, transfer entries. So all these will be recorded in the journal proper. Just remember this point alone. Only credit purchase or credit sale of goods. What is a good? When we purchase something with an intention of resale, we call that as good, your stock. Okay, when that purchase is a credit purchase, then that will be recorded in the purchase day book. If you are selling goods on credit to your customer, that will be recorded in the sales day book. Assets will be purchase or sale of assets. Purchase or sale of assets will be recorded in the journal proper. And not in day book. Able to understand? It's very simple. Only 2 important points to be remembered while preparing the subsidiary books. Let us see that. So, points to be remembered for the preparation of day books. First point, only credit transactions of goods to be recorded in day book. So, it can either be a credit purchase of goods or a credit sale of goods will be recorded in the respective day book. Omit cash transactions. In case of any cash transactions, you have to omit that. Cash transactions will be recorded in the cash book, not in day book. So, in case of any cash transactions, the transaction has to be omitted for the preparation of day book. Then assets will not be recorded in day books. So, we will be recording the assets, purchase or sale of assets in journal proper, not in day book. So, in case of any asset, purchase or sale of an asset will not be recorded in the day books. So, these are the 3 important points to be remembered for the preparation of subsidiary books. So, this is the format for purchase day book. Have date, particulars, invoice number, which is in simple terms, it is a bill. I hope all of you have seen a bill. So, when we purchase something from a shop, in turn we will be getting a bill prepared by the seller stating the particulars. So, what kind of product is that? What is the quantity? What is the unit price? What is the total value? So, all those things will be mentioned in the bill. And that invoice has a number that has to be recorded here. Then ledger folio, details, and then the total. So, this is the format of purchase day book or purchase journal. So, what is an invoice? Any bill or statement prepared by the seller and sent to the buyer, giving the details of goods sold such as quantity, price per unit and total. You call this as invoice. The next will be the format of sales day book or the sales journal. So, you will have the date, particulars, invoice number. So, here you will be having the outward invoice number. When we make a sale, we will, as you all know, invoice will be prepared by the seller. Right? We will give an invoice to our customers stating the description of the product. What product is that? What is the unit price? What is the quantity? And what is the total value? So, it is similar to a purchase day book. The columns are the same. Date, particulars, invoice number, ledger folio, details, total. Same thing for sales day book. Again, you will be recording only credit sales. Cash sales must be omitted. Similarly, sale of assets must also be omitted. Only credit sales of goods will be recorded in the sales day book. So the next one is format of purchase return book. So when we return back the goods which have been purchased, there may be several reasons for the return of goods back to the supplier. Goods may be defective, or they might have been damaged in transit, or quantities delivered may not agree with the invoice. So you would have ordered 50 units, but only 40 units will be there inside the box. So when you receive, you are receiving for only 40 units and 10 is less. Right? So it may not be the same with the units specified in the invoice. Or the sample and the products delivered may differ, or any sort of breach of agreement may be the reason for the return. Can be any reason, price variations, or it may not be according to the order specified, or the sample shown. Sample may be different, the exact product may be different, the product which you have received may be different. So when we return goods back to the person, especially our supplier, you call it as purchase return. So what is the format for purchase return? Date, particulars, debit note. So what is this debit note? So debit note is a statement which is sent to the person to whom the goods are returned. So what does a debit note contain? What is the product that is being returned? How many units are being returned? What is the price of each unit? What is the total value? And why the product is being returned? So these are the items that are shown in a debit note. Able to understand? The buyer will send a debit note to the supplier stating why he is returning the goods back to the supplier, how many units are being returned, what is the unit price, what is the total value. So all these things will be mentioned in the debit note. So this is the format of purchase return book. So in the previous format of purchase return book, last column I didn't write remarks. Okay. So the reason for the return will be mentioned there. The next one will be format of sales return book. So now our customers are returning the goods back to us. So we will be recording that in the sales return book. So date, particulars. Instead of debit note, here you have credit note number. Then ledger folio number, amount, details, total, and the last one is remarks. So what is this credit note? Who will prepare that? So a credit note is prepared by the seller and sent to the buyer when goods are returned, indicating that the buyer's account is credited in respect of goods returned. So the seller, he prepares the credit note and it contains the details such as description of goods returned by the buyer, by the customer. How much is being returned, the quantity returned, and also the value. So that will be mentioned in the credit note. So we have seen the format of purchase day book, format of sales day book, format of purchase return book, format of sales return book. So with this, we shall move on to the exercise problem. Now I will take that bills receivable and bills payable book later. You have only one illustration. We will see to that later. As of now, we will do the exercise problems. So just go through the format. In the next video, we will start with the exercise problems with the preparation of purchase day book, sales day book, purchase return book and sales return book.